Okay, good morning, and thank you for joining our UK Mortgages First Time Buyers Workshop. We'll be talking about mortgages, remortgages, buy to let, as well as everything mortgage related. I probably shouldn't have worn a striped top because that's kind of weird. I will resolve that. But just want to welcome everybody and thank you for joining. We'll be going through a couple of things. And if you have any questions, feel free to add your comments to the chat. So first, let me just tell you a little bit about myself. My name is Anthony Lindsay. I've been in banking for over 30 years, both in the US and in the UK. Throughout my tenure in the industry, I've done everything from debt management, so pre-litigation work, to wealth management, to lending and mortgages. So that's what we'll be talking about today. Just could by looking at the chat, could you just let me know that you can hear me, that you're able to hear me? Just put something in the chat that I know that you can hear me, because otherwise I don't know if there's any problems in with the audio. Okay, awesome. All right, so as I said, I've been in banking for over 30 years. And one of the reasons why I say that is because my approach to mortgages is a lot different than what you'll find with a lot of mortgage brokers, maybe who have just started their career and are just looking to put mortgages under their belt. I'm as interested in making sure you stay in your house as I am in making sure that you get your house. When I used to do debt collections for HSBC, I used to be head of the pre-litigation department. So that's the department that actually has to prepare a case for foreclosure. So this would be at a point where the person's missed quite a few payments, probably about 6 months worth of payments. We've tried to exhaust all of the options, tried to give them alternatives to making sure that they can stay in the home. And this is kind of the last ditch effort. So the reason why I bring that up is I've had to knock on people's doors. I've had to sit in people's living rooms and actually have that conversation to see what we can do. So I would never, as a mortgage broker, want to put someone in a situation where they're unable to stay in their home. So what's the difference between a broker and going to your bank? Now, there's three key things. The first one is choice. When you go to your bank, and I've managed Halifax, I've managed Lloyd's, various banks, and I've had teams of mortgage advisors, not brokers, but advisors. The reason why there's a difference is because when you go directly to your bank and they give you information, they can only talk about the products and services that they offer. So you're not really getting choice. As a mortgage broker, I work with over 30 different lenders, which means depending on your individual circumstances, I'll be able to provide a lender that will lend to you and won't just say computer says no. The other thing is service. Now, this can be a good thing or a bad thing in that the people that are in the branch, you've gone in based on the reputation of that bank. You've gone in to ask about a mortgage. So sometimes you don't find that you get the highest level of service because that individual didn't have to work to get your business and they don't have to work to earn your trust. Whereas with a mortgage broker, it's very difficult building a business as a mortgage broker. The only way you can build your business is through trust and really good service. Because the reality is, all brokers go to the same banks. All brokers, for the most part, use the same system. So, what really is going to separate the different mortgage brokers is their service. And then the other thing is when you go to the bank, what you're not going to get is a conversation around protection. And by protection, I mean income protection, critical illness protection, as well as life cover. As a FCA regulated mortgage broker, I am required to have the conversation with you about your protection needs. So when you speak to a broker and they start talking to you about life cover, all the uncomfortable things that people don't want to talk about, especially when really all they're trying to do is get a mortgage that they can get the home that they want. When they start talking to you about that, view that as them being professional because that is a required part of the process. But the caveat is this, you're not required to take out protection in order to get a mortgage. So you should never be pressured into getting protection, especially because protection is to protect you and your family and not put you in a position where you're unable to stay in your home due to an accident or maybe sickness or the death of a spouse. So, who's involved in the purchase process? Statistically, they say that 40% of 47% of mortgage owners, or mortgage people that have mortgages in the UK, 47% of them don't fully understand what a mortgage is, how it works, and some of the terminology. So, one of the reasons why I do these workshops for people that have mortgages or looking to get mortgages, I do these workshops so that people can understand how mortgages work a little bit better. That way, when you speak to a broker, or if you do decide to go to your bank, you are more informed and you can make a better consideration on what you're looking to do. All right, so the three people that are going to be involved in the process are the broker, hopefully me, the estate agent, and the solicitor. One of the things to consider and keep in mind is that the broker is the only person in the transaction that works for you. Everybody else kind of is just doing their job. So, for example, the estate agent works for the seller. So, the estate agent's job is to get as much for the property, for the sale of the property as possible. That's their legal and contractual requirement. So they're just doing their job when they're trying to get you to offer more. The solicitor works essentially to just make sure that the T's are crossed and the I's are dotted. All right. So the solicitor is there to make sure that everything is done in the right way and make sure that your legal rights are protected and you meet all of the legal requirements. Now, this is important because quite often, the estate agent will make you feel as if you are the most important person in the world. A lot of estate agents doing their job are very good at making you feel as if you are the person that they work for. And that can sometimes put you in a situation where you end up paying more than you should, or letting your guard down. And what I mean by that is you as the buyer, you should want to get the very best price. Sorry about that. You should want the deal to go through as quickly as possible. So it's important to remember that the estate agent does work for the seller. So I'm going to go through this because this will probably debunk a lot of myths and misunderstandings that people have about mortgages. So this is a overview of what I would consider the perfect profile. Now, I'm not saying that everyone should have this or everyone on this call will have this, but this is what, when most people are talking about percentages of deposits and various other things, this is what it would be based on quite often. UK passport. So having a UK passport gives you access to more lenders, more products, and in some cases, better rates. PAYE, employed, meaning that the individual is a permanent employee and is paying taxes and has been at that job for more than 12 months. A high salary is another thing that can open up a lot of doors and ensure that you can access more lenders and better interest rates. Good credit rating. So, a good credit rating will give you access to more lenders and more products and a large deposit. So, although this is the perfect profile, I'm going to go through things and explain ways of making sure that you put yourself in the best situation when purchasing property. So, a few uncomfortable facts. So, one of the things that you have to remember, and we say this in the industry, is time kills deals. Time kills deals. So, what that means is the longer it takes to complete a mortgage, complete a purchase, the more likely it is not to go through, either because the seller changes their mind or the buyer changes their mind. 50% of all deals don't go through. So 50% of all deals that start don't actually complete. And that could be because of hundreds of reasons. But the longer it takes, the more time it gives people to look elsewhere or for the seller to get another offer. This one people find a little bit coarse to say, but um, there's a feeling or there's an expression, buyers are liars. So buyers are liars. And don't get offended when we say that. Think about it this way. When you are purchasing a property and you're speaking to the estate agent, you're never going to tell them how much you actually want to spend on that property. And because you don't tell them how much you want to spend on that property, you're actually not being honest, right? The seller in most cases is not going to say how little they will take for the property because they want to get as much as they can. And then the estate agent kind of sits somewhere in the middle where they're trying to get as much for the seller, but they don't want to as they want to get as much for the seller, but they don't want to lose that buyer. And then the last one is pounds and not percentages. The reason why I say that quite often as a broker, when I speak to someone and I ask them how much they have for a deposit, they'll say 10% or 5%. Keeping in mind that that's not a number. Because if you were looking at a property at 300,000, it's 10% of 300,000 is different than 10% of 330,000. So it's really important when you speak to your broker that you're open, honest, transparent. Don't hide things from your broker because if you don't trust your broker enough to be able to tell them all of the facts, all of the details, then you really shouldn't be working with them. So always let them know how much you have in pounds as opposed to just giving them a percentage based on a figure you've come up with in your head. All right, so now we're going to just move into the key stages of a purchase. Some people may know, some people may not know. So, stage number one is really just having this conversation, understanding how mortgages work and how much you, as an individual, qualify for. One of the most frustrating things as a professional mortgage broker is speaking to people and they've taken advice from people who don't work in the industry. Just because someone has a mortgage or has had a mortgage in the past or thinks they know, it doesn't mean that they have all the information that a mortgage broker would have who does it every day. So I always advise make sure that you start speaking to a mortgage broker I'd say 6 months before you even need a mortgage. So if you have nieces, nephews, sons, daughters, young people who are like, I'm stuck in generation rent, which I believe is a lie, but we'll get to that. Um, have them talk to a mortgage broker beforehand. That way we can debunk some of the myths and we can tell them how to get a mortgage. So the initial consultation and financial assessment will help you understand how much you can actually get and or what you would need to change in order to get a mortgage. Then the next thing is an agreement in principle or a decision in principle or a mortgage in principle. They're all the same thing. So what an agreement in principle is essentially me as a mortgage broker or you as an individual going on a bank website, keying in some information, and it's saying this is how much we would lend you. Now, I'm going to make a contradictory statement in the sense that an agreement in principle is very, 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 very important as far as the process of getting a mortgage. It's important because an estate agent, in most cases, will not allow you to make an offer on a property until you've actually shown that you can get that mortgage. Because it's silly for them to waste their time talking to someone who may not be able to purchase the property. On the flip side, an agreement in principle, the way that most mortgage brokers do it, isn't worth the paper it's printed on. And the reason why that is an agreement in principle is not a credit check and it's not a formal application. So in theory, I could go online and get anyone a £1 million mortgage because I'm just putting figures in and those figures aren't being verified and a credit check is not being done. But we'll come back to that. So that's the next step. Once you have that agreement in principle and know how much you can borrow, then you start looking for the property. Now, I do offer a help to find service, and I do offer a negotiation service. So you've got your agreement in principle, you know how much you can borrow, you then go and find the property. Once you find the property, we would negotiate. The seller would agree to sell that property at an agreed price. This is where everything really starts. This is where we convert the agreement in principle into an actual mortgage application so that you can get an offer. So this is where the bank is going to ask the mortgage broker or you as an individual to provide bank statements, proof of income, proof of savings, all of the things that they can accurately assess your circumstances and actually offer you a formal mortgage offer. This is also the stage at which they would do a valuation. So let me be clear, it's a valuation and not a survey. So what is a valuation? An evaluation is essentially the bank saying, this is how much we feel the property is worth. Now they may come out and do what's called a drive-by valuation, where they actually drive by the property, or they may do something that's called a desktop valuation, where essentially they are able to look at their system and look at how much properties have sold for in that area. Now, a couple of things can happen when they do the valuation. So we've already talked to the seller, we've already agreed a purchase price. Now, when the bank does the valuation, let's just use the figure of 300,000. You may have agreed a purchase price with the seller of 300,000. Now, when you agree that purchase price, it doesn't mean that the bank is going to come back and say, we agree that this property is worth 300,000. So it's really important that you are prepared for one of three things. Circumstance number one, which is the ideal, the bank comes back and says, yeah, we agree with the purchase price. Now that's great because then you don't need to change any paperwork. Option number two is that they come back and say that the value of the property is higher, which is great because then that means you're buying it at a lower price than its value. That means you have even more equity once you move forward. Now, the one that usually causes the problem and catches people off guard, and some mortgage brokers won't explain this in advance. Sometimes the bank will come back and say that the property is worth less than the agreed purchase price, in which case there's going to be a shortfall, and either you're going to need to come up with more of a deposit or you're going to need to borrow more on the mortgage. Now, once we get that mortgage offer, that's when the legal work will start. I always advise people to have a solicitor lined up when they start the purchase process. That way, you can get things moving quicker. Keep in mind that not every bank works with every solicitor. So that's why I always encourage my clients to allow me to refer a solicitor that I know will work with the bank, will work quickly. Because keep in mind with a mortgage, it's the process is only as fast as the slowest person. So what you don't want to do is cut corners, find the cheapest solicitor who's going to actually hold up that deal and may cause you to lose that property and or have to pay an additional month's rent. So think about it this way: you're paying £2,000 a month in rent, and because of your solicitor that you saved £400 on, that solicitor causes you the deal to take 30 days longer, then you're paying an additional £2,000 in rent to save £400. So it's quite silly. But once it starts moving, you have the exchange of contracts, then you have completion and move in. And that's really what you want. You're trying to purchase a property. You're not trying to get a mortgage. So you get the mortgage because you know you need one. But what you're really trying to do is get into that new home. So the current turnaround in the UK is about 6 months. So it's taken about 6 months to complete. And that's because of searches. It could be because of lots of things. Some might go quicker, some might take a little bit longer, but right now the average is 6 months. Things can go wrong in that process. So you may go get a valuation and also opt to get a RICS, R-I-C-S, a RICS survey. You might find some things in the property that you're not comfortable with, which might cause delays because you go back and want to negotiate. The other thing to consider is in that process, in that 6 months, rates might change. So another benefit of working with a broker, a good broker, as opposed to the bank, some banks will adjust the rates automatically if rates go down, some won't. But what a good broker will do is keep looking at the market and seeing where the rates are. Now, the great thing about having an offer is that once you have an offer from the bank, you can get that rate. Okay, so that offer is usually good for about 6 months. However, if rates go down, as a mortgage broker, I can contact the bank with your permission and put you on a better rate. So you're protected against the rates going up, but you can also benefit from rates going down. Now, as we move further in, if you have any questions that haven't been covered off, you can put those questions in the chat. So one of the things that you can do to get the very best price is let me negotiate. I do this all day, every day, and I'm very good at what I do, just as I trust you're very good at what you do. So although you may feel that you can negotiate as good as me, you don't have the time because you're working. So do you really want to have to go in the break room, or if you're at home, take some time out from your job to have a conversation when actually you could allow someone that's going to be probably better suited to do it for you. I don't charge for the negotiation service, as well as the seller and the estate agent usually don't like the broker to do the negotiation because they know that the broker will probably get a better deal. Another thing that you can do is understand the reason for the sale. Okay, so it's not just about pounds and pence when someone is selling. Someone might be selling and they have to sell quickly, which means they may be willing to take a lower price from someone that can get the deal done quicker. This is why often people will take a lower price if it's a cash purchase because they know it will go through a lot quicker. Understand if maybe there's no real pressure on the person selling. We'll always try to understand the reason for the sale, and this is what I do as part of the negotiation. I'll have that conversation. The other thing to keep in mind, do not be emotional. As much as purchasing a home is one of the most important things you'll do, you have to take out some of the emotion. So don't allow the estate agent to force you into looking at a house that's more than you want to spend or that does not meet your criteria. Always sit down with whoever's you're purchasing the property with, have some very clear guidelines of what's important to you. So for me, having a young daughter, having a backyard is a non-negotiable. So when I was looking for a property and the estate agent's like, oh, we have a great property for you. However, it doesn't have a backyard. I say, stop right there. Don't want it, don't want to look at it. Do not allow them to convince you to do something that you don't want to do because guess what? They don't work for you. And once you move into that home, more likely than not, you'll never hear from them again. And as well as the price, don't allow them to inch you up beyond what you feel is comfortable and affordable because you could put yourself in a financial situation. Top tips for getting the very best mortgage. Move your deposit into a high rate savings account to maximize the interest. Because you don't traditionally have to really spend the bulk of that deposit until towards the end of the process, you could put that money into a savings account where it's getting interest for you. Now, if you're paying down a lot, so if you have a lot to pay down on a deposit, you never know. Depending on how much you're putting in and the right interest rate, you could be making two, £300 a month. Now, with that said, I do have to say I am not giving you financial advice. I'm just sharing best tips. You will need to think about the impact of of the taxes, et cetera, that you may pay on interest. But it's something to consider and speak to a financial advisor or an accountant who can give you the information that you need. But I would say high street banks probably aren't going to give you the best interest rates. Usually, the best interest rates are going to come from checking online, so online accounts. But I would always recommend that you just go to Money Saving Expert where you can find some competitive interest rates. and also understand which banks are doing what. And they're all reputable financial institutions. The other thing I would say, clean up your credit. So clear any small debts that you have. So if you can, it's better to use some of your deposit to clear your outgoings than to put it towards the mortgage in most cases. Again, I'm saying these things as general things. Your circumstances might be different. But if you can clear up all of the smaller things you have, like if you have 150 pounds there or 200 pounds there, clear up as much as you can well before you go to get your mortgage. Manage your debts responsibly and cancel any unnecessary direct debits. So you should do a full personal financial review. Look at your budget, look at the subscriptions you have, and anything you don't need, get rid of well before you apply for the mortgage. So all of the information that I'm giving you now is based on preparing for your mortgage at least 6 months before you're ready to move forward. Track your spending closely leading up and during the buying process. So don't apply for additional credit during the mortgage process. Don't go out and overspend. Make sure that you manage your budget well during the process because until you actually complete, anything can go wrong, as I said. Additional expenses, understand the other costs that are involved in purchasing a property, especially if you're just renting. Like if you just rented, the great thing about renting, and a lot of people, vilify renting, it can be a great way to live because renting gives you way more flexibility. So if you decide that, you want to move somewhere and your landlord is happy to let you out of the lease, which in a lot of cases they will be, especially in today's market, because that might give them the opportunity to raise the rent, right? So if you're renting and something breaks or the roof has a leak or whatever, you don't have to worry about that. When you own the property, you're responsible for everything. So think about those expenses. Think about the stamp duty. There's a revision happening to the stamp duty in March of 2025. So as first time buyers, you're not going to get the level of discount that you were previously getting. This is going to be a huge impact to people in London. Outside of London, there will be an impact, but it might not be as severe. But think about stamp duty. Think about legal fees. So out of your deposit, there's some money that's going to go towards purchasing the property, but some of it has to be spent along the way. So you have to pay the solicitor. This is why a client telling me they have a 10% deposit means nothing to me because I need to know the pound amount that as we start to give them figures on how much the solicitor is going to cost, we know how much to adjust that we can actually put towards the purchase. Think about moving costs. Think about, any light decorations you may need to do on the property. And also consider once you move in, you may be spending all of your savings. So think about that as well. But don't just think, well, I have £15,000 and that's that. There'll be other things that you may need to consider. So you want to build a strong financial profile. So you want to maintain a steady job. Now, going back to the ideal customer, there are lenders who will lend based on a job offer. So you may not be working now, but you may have an offer for a new job with a large, reputable business. Let me stress that. It can't be your cousin's company or your a family member's company and they write you a letter and print it out. Banks want to know that it is a reputable business and they will research the company. So, working in the financial services industry, if I were moving employers and I was employed for a while, but I was moving from, let's just say, Lloyd's to Capital One, they could say, all right, well, you're not going to be able to call someone and say, oh, could you just make a letter for me, someone at Capital One? So they would look at that. Not all lenders will accept that. Some lenders need for you to be off probation. Every lender is different, but this is the benefit of working with a broker. As I said, avoid taking out new debts or making large purchases during the mortgage application process. Just wait. Just wait. And with that said, understand that in a lot of cases, after you get your mortgage, your credit rating will drop. And that's because you're going to be changing address and you've now got this huge loan on your credit rating. Avoid payday loans and gambling. So, what are the next steps? I don't see that there's any questions in the chat at the moment. So, we've made really good time. So, what are the next steps? What I would say is what you want to do if you're considering purchasing a home or doing a remortgage, speak to a mortgage broker. Allow that mortgage broker to get the information, details, and documents that they need to be able to assess your individual circumstances. That way they can give you the best advice, and then they can move towards getting you an agreement in principle. That way you know what you're working with. It doesn't lock you into anything. It's not a credit check, and it's not a formal application, as I said, but it will give you a guide on what you can borrow. The next step is to start looking for your new home. If it's a remortgage, then obviously you don't need to do that because you're already in your home. And then don't forget to tell a friend about me. So if you have any friends or family members that want to understand how mortgages work better, you can you can give them my information. I am going to open it up to questions. We'll take some questions for a while, or if you just have a scenario that you want to put in the chat, if you want to say, a situation that you've heard about or you're familiar with, that you want me to answer for you, I'm more than happy to do that. While we do that, I am just going to say my name is Anthony Lindsay. I'm an FCA qualified and registered mortgage broker. I can help you with your purchase of a buy to let property. I can help you with a remortgage. If you're a portfolio landlord, I can give you a hand. If you need a bridging loan, I can do that. I do commercial and semi commercial. As a mortgage broker, I will also make sure that I have a conversation with you around protection, and that would include wills, just to make sure that you're in a situation that if the worst were to happen during the life of the mortgage, that would be we protect you as much as we can. As I said, that is a legal requirement, so I would make sure that I adhere to the guidelines of the FCA. My phone number is 077-235-10236, and my email address is a.lindsay at charlescrownfinancial.co.uk. I'm going to put that in the chat so that everybody can have that. Um, so that's my phone number and a.lindsay at charlescrownfinancial.co.uk. What I will do is I will send you an invitation to a mortgage portal where you can find out more about mortgages. Occasionally, I will send you updates about what's going on in the markets and just things that will help you as a consumer to understand how mortgages work better, because it's important that you are an informed customer. That way, you don't fall into the trap of someone explaining things or not explaining things to you. You don't fall into the trap of people telling you or giving you the incorrect information, because purchasing a home is one of the most expensive things that you will do. It determines a lot about your life. It determines if you have children. It determines where they live. It determines what friends they have, what school they go to. So it's a really important thing. So I don't see that we have any questions. I will give it one more minute. If anyone has any questions, oh, I do see one. If your mortgage principal expires, can you reapply? If so, does it affect your credit or chances of buying? That's a fantastic question. So, first of all, a mortgage in principle is not a credit check. So, in most cases, they don't do a credit check when you get an agreement in principle, mortgage in principle, decision in principle, which is why I was saying it doesn't really mean much. However, if it does expire, because those tend to be valid for about 6 months, if you have a good mortgage broker, and that's why I keep stressing this, it won't expire because they'll stay on top of it. But if it does expire, they can apply for another agreement in principle. But also keep in mind an agreement in principle, because it's not a credit application and it's not a credit check or formal application. In most cases, most lenders don't lock you into a rate when they do an agreement in principle. They're just saying, we agree to lend this amount of money based on what we've been told. So a mortgage in principle, you can reapply. It shouldn't affect your credit, but do keep in mind that if that lender does do a credit check when they do the agreement in principle, most don't, but if they do, it's the mortgage broker's responsibility to advise you that a credit check is being done. So in theory, if you do that credit check once and then have to do that credit check again, in theory, but in theory only, it could affect your credit because then there'd be more than one search. That's a fantastic question. Thank you for asking that question. This is one of the reasons why I say, I've been in this industry for a long time, and as someone that understands credit, debt collection, credit reports better than most people, I can answer those type of questions. But as I said, everything that I'm discussing today is a very general conversation. Your individual circumstances may be different. We have another question. Um, do I think that interest rates or house prices will go down? Um, all right, this is what I say. It doesn't matter if prices go up or down. And I pause when I say that because everyone's like, yeah, of course it does. Ultimately, what is in your pocket is your economy. If house prices go up and you own a house, that's good. If house prices go up and you're looking for a property, it's not so good. But keep in mind, it's simple economics 101, supply and demand. If interest rates go down and more people are trying to get homes, house prices go up. So think about it. If you're selling your house and you have it on the market for 300,000 and seven people offer you 300,000, what are you going to do? You're going to put the price up and you create a bidding war. If you're selling your property for 300,000 and no one is coming and looking, or no one's making an offer at 300,000, the estate agent is going to say we need to do a price reduction. So what is my feeling? My feeling is interest rates are going up, even though the base rate went down recently. The SONIA rate, which is what we look at, the SONIA rate, it hasn't been going down. So interest rates are going up. I have seen lenders the same week of the Bank of England announcement put rates up or pull products. But the good news is, potentially, if you can afford to buy a home, you can afford to buy a home. My feeling, and these are just my personal feelings, is what you see happening in the news is just marketing for which direction they want the property market to go in. So when you keep hearing, oh, it's so hard to buy a home, and they're trying to get people to not buy a home, right? And it's why I also say this whole concept of generation rent and young people can't get properties. I've been doing this a long time, and it's very rare I can't get someone a mortgage. It's very, 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 very rare, right? Usually, the issue is somebody's expectations. So you can't be 27 years old, eating out every day, not saving money, going on vacation 3 times a year, and expect for money to just drop out of the sky that you can buy a house, right? It takes sacrifice, just like our parents and grandparents had to sacrifice and didn't go out and buy $1,000 phones. And it also may mean that you have to buy a starter home. You can't expect to buy a 3 bedroom Victorian with a huge staircase in zone one as your first home unless you have that type of money. So please, let's break that myth that people cannot purchase. It is harder than it was, and the income multiples of the average house price are higher than they were. But there's a real estate saying that the best time to buy was 20 years ago. The second best time to buy is today. So speak to a mortgage broker, look at your personal circumstances, and determine if purchasing now is a good time for you, regardless of if prices are going up or down, because historically the trajectory for house prices is always up. House prices always go up in the long run, which is why it's such a safe bet for investment. Unless we have any other questions, we will close out. I appreciate everybody being a part of this session today. And as I said, please refer friends and family. The QR code on the screen is how you can book an appointment with me. I do not charge for conversations. I do not charge to, get you illustrations. I have two fees. The first fee I charge is for an application after I've done all my due diligence and given you some illustrations. Once I get you the mortgage offer, I charge $495. So there's two fees. I charge £99 for an application because you've been on this podcast, and I charge $295 for a mortgage offer. I appreciate everybody that was on the call today. My phone number is in the chat as well as on the screen, and we will close out.